Hello and welcome to the look ahead for Thursday, the 25th of April, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, tomorrow we've got German GfK consumer confidence data, the ECB economic bulletin, US Q1 GDP data, as well as US jobless claims, and more earnings on tap, including from tech giants Microsoft, Alphabet. We've also got AstraZeneca and Barclays will also be in focus. So just kicking off with the US, obviously, as I mentioned, we've got US GDP figures. Now, this is the first reading for the first quarter of this year. Expectations are for the quarter to have seen growth slow slightly to 2.5% annualized. That's down from 3.4%. Now, the market's going to be watching this data really closely because it's going to want to see signs that the US economy is cooling. There have been some concerns more recently from hotter than expected data and stronger than expected data and hotter than expected inflation that actually the Federal Reserve may struggle to cut rates anytime soon. So, if we do see some cooling off in data, like we saw yesterday when we saw US PMI figures come in below expectations, it's a case of sort of weaker macroeconomic data is good news for stocks. Now, as far as the Nasdaq is concerned, we also have earnings, as I mentioned, from the Microsoft and also from Alphabet. Now, Microsoft is expected to report earnings and revenue growth. We're expecting to see EPS of 2.82 on 60.76 billion in revenue. That's up from 245 EPS and 52.86 billion in revenue the same period the year earlier. Now the results come as the Microsoft share price trades up 15% in just 4 months, looking rather frothy perhaps at those levels. The market's going to want to see strong numbers to support that really lofty valuation, very much focused on sort of AI and monetizing AI, and that potentially could lift revenue guidance as well. As far as Alphabet is concerned, expecting earnings of 1.51 EPS, and that's on 78.57 billion in revenue, up from 117 EPS on 69.71 billion. Now, again, it's going to be much about the stabilization of advertising and then plus the sort of favorable AI trends, which could have boosted Alphabet's growth prospects. So here in front of us, we have the Nasdaq 100 index. Now, as we can see, it has recovered from the April low. We saw that pretty steep sell-off last week where it dropped 6%, rebounded just below, found support just below that 17,000 level. It's risen above 17,160, which is the February low. It's risen above the 100 SMA, but we seem to be stalling there. Now, the RSI is still below 50. Also, if you have a look closely at that chart, there's that longer upper wick on that today's candle, which raises questions about buying demand at the higher levels. Obviously, we get some very strong numbers coming in. We've got Meta overnight as well, don't forget. And we get weaker US GDP data, then we could see this the rebound extend towards the 17,800 level, well, 17,800, which is the March low. Now, if we do get stronger GDP data, if we get any sense of weakness in those tech earnings, then we could see a retest of the 100 SMA as immediate support, which is at the 17,450 level. Below that, be looking at the 17,160, which is the February low, ahead of the 1700, which is that the April low. Below there, we'll be looking perhaps towards a deeper sell-off towards the 200 SMA. Now, just sort of continuing with other sort of markets to be watching tomorrow, I think we can't really take our eyes off US dollar, Japanese yen right now. I mean, okay, so the focus is going to be on this US economic data that we've got, but also the USD Japanese yen is breaching that 155 level, the line in the sand that potentially opens the door to intervention from Japanese authorities. Now, there have been strong warnings this week from Japanese authorities about speculation on the yen doesn't really seem to have had much impact. Now, the big question is, will Japanese authorities do something with the Bank of Japan meeting on Friday? Probably unlikely, but so that could mean that if we get a push over that 155, then we could actually see potentially 160 coming into focus. Obviously, if we get weaker than expected US GDP data, maybe we'll see that come down, but it's questionable because at the end of the day, this is being supported by the fact that the Federal Reserve is probably not going to be cutting rates anytime soon, and the Bank of Japan may not be hiking rates anytime soon either. So as I said, that 155 really key level. Keep watching there. If we get a sort of move back below, then on the downside, be looking out for the 153.50. That was last Friday's low. Below that comes in the real support level, which is around that 152 level. Just moving on to what we've got going on in Europe. As I said, we've got German data coming in tomorrow as well. We've got the German GfK consumer confidence, and it is expected actually just to improve modestly. So it's supposed to tick up to 25.9 from 27.4. Now we're seeing this across German data. Actually, we're starting to see the data improve very slightly. We saw the IFO business climate data today come in higher than expected. It's the third straight month that it's improved. We saw it with the services PMI earlier in the week, a jump higher there. So, we're seeing the signs that the Eurozone's largest economy is starting to slowly turn around, which is an encouraging sign, but it's not going to be enough of a turnaround to put the ECB off cutting interest rates potentially in June. So, that sort of combination of a possible ECB rate cut soon in the coming months, combined with a sense that the economy is starting to improve, could be supportive for the DAX. Now, as far as DAX levels are concerned, we can see that the DAX has got that long lower wick. We talked about this yesterday, which suggested that could have been the end of the downtrend. Now we've seen it pushing higher. It's back above the 18,000 level, which is encouraging. Bulls are going to keep on trying to push that up above the sort of 18,400, 18,500 level to the 18,650, which is then the all-time high. Just on the downside, I was going to say, as far as support is concerned, do keep an eye out for the 1800. That was the key level that we've been watching at the moment. A breakdown there could see a deeper sell-off. Other one to be keeping an eye on here is the euro US dollar, which I'm just going to pull over now. Just bear with me. There we go. So this is the euro US dollar. Again, just keeping in mind that we've got Eurozone data and we've got Germany data and we've got the US GDP figures and jobless claims as well coming in. So, this is the euro US dollar. It continues to trend broadly low in that falling channel. We did see more recently that it's recovered from the 106 April low. It's pushed higher, it's attempting to break that zone now. That's the 107, 107.25, and it just seems to be struggling to push up there. If we can get a move above there, because we're getting stronger than expected German data, weaker US data, then that could expose the 200 SMA at the 108.10 level. That will be the next area to be watching out for. Sellers are going to be really struggling to defend that 107, 107.25 level. If they do successfully defend that, then on the downside, 106.40 is a level to be watching out for before the 106 April low. So I do hope you liked what you've seen with me. And if you do, then please do give this video a like. And if you would like to see more videos like this, then please do subscribe.